welcome to the Friday class, guys. Hopefully you have enjoyed the previous video. If you don't know what I'm talking about, please check out the video link below. It's the introduction and the premiere from the MTF, so the multi-time frame support and resistance indicator, which is great, and we'll explain you step by step how to use it, how to set it up, and basically it's half of the class. So if you have not watched it yet, please go back and watch it on the YouTube channel. It is needed for this class. So without further ado, let's get started. All right. So let's get started with the main chat. So if you're new in here and you're not familiarized with the tools, let's add them together, right? So let's head over to the indicators, and remember, if you already have them on favorites and for any reason they're not working or not showing, please add them back from the invite only scripts. You might be seeing a lot of indicators around here, but do not mind them. They're testing branches or testing parts of previous indicators or future indicators, but the ones that we're going to be using are the ones that you will have. So at this point, I'm going to be adding at least 3 indicators, which are going to be my main indicators, which I'm going to be using both for explaining you guys the main settings and also to review a couple of strategies, right? So let's get started with Market Oracle. Then I'm going to also add the smart money concepts, and also I'm going to add my oscillator, right? So chart prime oscillator right here. So right out of the box, we have a ton of things going on here, but don't worry, we're going to go over them all, right? So let's get started by turning basically everything off and starting only with the basics. So let's start with the Market Oracle and then review step by step what it's all about. So for that, I'm gonna enter or hover over the Market Oracle settings right here in the gear icon, and then you'll see that at this point I'm gonna have a 2.1.2 version. So at this point, remember, do not copy any settings that you might see because this is default, and we need to go over how to set your own basic indicator and sensitivity, agility, and a couple of more tricks. So at this point, let me just turn this one to trend mode because this is going to be the one I'm going to be starting with. Then I'm going to do abbreviate signals so I can see this flags way better or smaller. That way I can keep my chart a little bit more clean. Then you can see right here, this is on optimize everything. I suggest you guys to start looking at this one first and then taking out the other ones later. If nothing in here actually works for you, then we're going to be adding a disable state on the trend optimization and then modifying the trend sensitivity and trend agility. We'll see that in a second. Then candle color mode, which I recommend having it on all trends. This will change the candle colors on your main chart with your current trend mode flag, right? So remember, trend mode, it is a trend finder. It is not a buy or sell indicator. Remember, trend mode, it is not a buy or sell indicator. By the way, or for the matter, we do not provide any buy or sell indicators. We actually believe way much more on confluence trading, right? And we're going to be teaching you all about it. So stay tuned and let's continue. Alrighty, so now right here we have our support and resistance settings. Remember on the video that you used. So remember, if you have not yet seen it, go back in the video and click the link, right? You're going to be seeing the support and resistance settings in here and also in your smart money concept bundle right here. If I go down here, you'll see also the same exact settings, right? So for that matter, I prefer to have it over my smart money concepts bundle. So I'm going to be disabling it right here. So I'm going to get rid of this. And let's just wait for a second. Here we go. Then we're going to be taking a look at the candlestick pattern settings. Right here, you can see the same indicator as you might be having inside the indicators, invite only scripts, and candlestick patterns. So basically, we have added it inside Market Oracle. So at this point, I'm not going to be messing too much with this, but I'm going to be explaining to you how they work, right? Now, we're going to be seeing some additional settings in which we have the dynamic reactor, reversal bands, external market influence, BTC signal influence, and trend lines. If you don't know any concepts, please refer back to the Trader's Smart Book, right? We have it on the Help Desk channel. So let's get started at this point by taking a look at the candlestick patterns and how they look and what it means. So basically, the candlestick patterns will automatically search for you candlestick patterns, just like its name applies, right? Or implies. So as you can see right here, we can see a bear E and a little bear, another bear E, an RTM, a bull E, right? If you don't know what it means, you have two options. Either double click on top of it and match it with this names, or head over the Smart Book on the Help Desk channel and search it there, right? But it is very, very simple. For example, bear E. We can take a look at here and you can find bearish engulfing, right? If I click it out, we'll see, just give it one sec. Here we go, they will go away. So basically, we are finding bearish engulfing candle patterns right here by only clicking it, right? The same thing with RTM. We can match it up right here with racing 3 method, right? If I click it out, once again, this will go away. So if you're familiarized with the candlestick patterns, this is a great tool to take a look at. At this point, if you're not familiarized with the candlestick patterns, I do advise you to go over the internet and do a quick search on the candlestick patterns. Also, we are providing a candlestick pattern PDF on the help desk. So head over there and look for those PDF. They're gonna make your life much more easier. But if you don't know anything and you just want to kind of like have a basic setting, basically the only ones that I look for personally, and this is me OC, remember you will need to take a look at your own. I'm going to be using bullish engulfing, bearish engulfing, FTM, so falling tree method, and morning star, evening star, and one more thing, enable pattern cluster. So a cluster, we're going to be talking about a lot of clusters around this class. Nevertheless, the cluster is just a group of signals in the same zone, right? So at this point, I'm going to turn on my clusters and reduce the amount or the distance in candle between one signal and another. So I like to have this one over 3, and we'll take a look at what it does. Alrighty, so let's move on and zoom out in here, and let's just give it one sec for it to stop loading. Here we go. Let's wait for that little eye. Here we go. And let's look for double bears, right? Now you can see that right here we have double bears, which are 3 candles or at most 3 candles apart. So that usually indicates a double pattern or a cluster happening in here. Same thing again. And as you can see, usually the double pattern breaks very strongly or very dramatically. Once again, right here, double bulls, right? Once again, well, in this case, it was not a double bull because it was not between the 3 candle distance. But again, double bull having that movement to the upside, double bull having a great movement to the upside. And once we have the double bull indicator, you no longer need to be searching them manually. So this is something that one of our members actually came up with, and shout it out to JRB because he is the one finding the double bear pattern and double bull pattern, and especially on Forex this works great. So I think it is pretty self-explanatory what candlestick patterns do and what enabling pattern cluster do. So let's turn them off so we can then concentrate in much more advanced tools and take a look at what else we can find in here. So at this point, I'm going to be turning on my dynamic reactor. The dynamic reactor is kind of like a moving average. It looks like a moving average or a VWAP, but it is not. In fact, instead of a moving average or a VWAP, which you might be confusing it for, this is a high volume zone, which means that the high volume area will move within the same price action. So this is very powerful because this is not a support and resistance. but it can act as one. So let's take a look at how it works and how we can identify it. Just before we close the settings, I'm gonna go ahead and change my trend line sensitivity to 50. So 50 is the setting that I advise you guys to start looking at the beginning, and then change the color from red and green to something neutral, right? So we don't want to confuse green trend lines or red trend lines, with buy or sell anything. So trend lines, at least for me, they are neutral, and we're looking to keep them neutral, well, right? And another thing that I'm going to be taking out, because I'm only going to be focusing on trend mode, reversal mode, or basically a market article itself, I'm going to be turning off my dashboard right here. So let's take a look at the dashboard going away at this point, and it's gone. Nevertheless, the dashboard is a very, very potent dashboard because it gives you the relativity confluence between the DXY, BTC, S&P 500, NASDAQ, and DJI based on different time frames and what it's doing with the asset that you're trading at this point. Nevertheless, I'm not going to be using it at this point, so I'm going to be turning it off. And at the end of it all, we have the alert customization. Basically, you can set infinite alert or infinite alerts, right? If you don't have a premium subscription to TradingView, this will come up very, very handy because here you can set whatever alerts you want, and then when you click OK and hover over the three dots, add alert, and you make sure that in here it says any alert function call, right? Then whenever you click create, you will be adding an alert of every single thing that you click down here. So with a single click, or basically with a single alert click, now you can add as many as you want. Alright, so at this point, let me click them off or out because I'm not going to be adding any alerts. We already have seen it. And then scroll all the way up, right? So now is the time to start taking a look at trend mode. So trend mode is kind of like the flagship indicator that we have. It's usually the most popular and also the one that confuses the most. So let's start with that one because I want to get some things out of the way, right? And so I'm going to be clicking this one, okay, and then optimize everything. So remember to also set your candle color mode as all trends and click OK. Now that we are in here, let's go over some basic steps on TradingView just to make sure that your charts are set correctly. So go over your right side and click and right click it and make sure that your scale price chart only is checked. You want to see the little check mark there, right? If you don't have it, if it's like this, then just click it and then you'll have it click, right? Another important thing that works or improves the aesthetics on the chart is by right clicking at the void or at the background, go over settings, then symbol, and make sure your borders are not checked, right? This will give you very sharp and neat candles. Instead of the other ones having a different color border can be a little bit overwhelming or not as a clean looking as my chart, right? So now we can see that we have a beautiful result of trend mode. And how do we know we have a beautiful or a great result? Because remember, trend mode, it is a trend finder. Trend mode, it is not a buy or sell indicator. Let's take a look at here. Like for example, this flag that I'm circling right now, right? This is not a sell signal. This other flag, the green one, it is not a buy signal, neither a close you short signal, right? This is not a buy or sell indicator. So what it is then? If I double click on top of them and read again one more time the name of it, we'll see that it says trend mode, right? Let's read one more time, trend mode, right? So just like its name implies, it is a trend finder. And let's remember what a trend is. So a trend is a series either with lower lows, right? And higher lows, that's a trend, right? Or higher lows and higher highs. That is a trend. Therefore, we want to make market oracle find trends, right? So right out of the box, we can take a look at that we are having a great trend finding tool. Right here, we can see big trend, which will grant us multiple opportunities to be jumping into multiple trades, right? Therefore, we want to find the biggest trend as possible, but as accurate as possible. So with that in mind, we are going to be using this moving thing. Remember, this moving thing, it's called the dynamic reactor. So this dynamic reactor, remember, it's a high volume zone. So based on that, the dynamic reactor, it is not a support resistance, but could be act as one. Let's take a look at one example of it, right? So at this point, we have seen that we broke through that dynamic reactor. And please take a look at this. Let me zoom in here so you can see it much more clear in here, right? And let me repeat something that I will be repeating to you every single class. So it is not about the breakout, right? It is about the retest. Look at that. Beautiful retest, and off you go. If you would have entered on the retest, you would have been golden for the next movement, right? Remember, if we are underneath the dynamic reactor, we usually call it for a bearish opportunity. So we usually tend to call or suggest you take a bearish approach, right? So a bearish approach, it is not only taking shorts, neither taking only longs. It means taking your opportunities based on a bearish trend, right? We're going to take a look at that further more. So at this point, we can see a beautiful retest, and off we go. And then every single pullback to the upside, it's great for set yourself for the next trade, right? As you can see, the dynamic reactor, it is not a support and resistance, but it could be acting like one. Why? Because it's a high volume zone. So when we have a high volume zone, we can expect two things. We can either expect to act like a brick wall, like rejecting the price, right? Like rejecting the price, like rejecting the price. Or if we manage to break through it, because yes, a high volume zone can be broken, and it will be broken eventually. So you need to bear that in mind, that at some point we're going to be breaking through that dynamic reactor, and you need to be ready for it. So let's take a look at what happens when it breaks through. So let me clear back my chart and head back to some of those zones where we see breaking through. And you can see that when we go through a high volume zone, we can see big body or big wicks or big body candles based on previous candle size. One more time, going through that dynamic reactor, big body candles or big volume candles based on previous candle size, right? One more time, breaking through that dynamic reactor implies big body candles or big volume candles based on previous candle size. It is not a rule, but it usually happens, and it just happens so often that we can basically predict when it's going to happen, right? Once again, it is not about the breakout, it's about the retest, right? And once we break below, we can suggest or we can start thinking that we're in a downtrend, right? So let's also take a look at that in the macro market and take a look at how that dynamic reactor works and identify the three stages of that dynamic reactor, because that's going to be very important when setting up the trend mode, right? So we're going to be using the dynamic reactor as a set point for the trend mode. So basically, you can see whenever we break below, we basically have a big and great and prolonged downtrend, right? Then maybe breaking above, having a little ranging zone, which I call weaving. And then, look at that, again, going back down, great short opportunities because we're downtrending. And when we break above the dynamic reactor, we can expect for an uptrend happening, right? Remember that your trends depend on the time frame that you're working. The same thing happens with the 15 minutes, the 5 minutes, the 1 minute, or the daily. So basically, If you want to know where the macro trend is, go take a look at daily, for example. Or if you're doing 5 minutes, maybe your macro chart could be your 15 minutes, right? So I do suggest you guys to take a look at bigger time frames to see where the general price might be moving to, if we're bullish, if we're bearish, if we are above the dynamic reactor, if we're below the dynamic reactor, and what kind of signal do we have for trend mode. Of course, after it is properly configured, right? So once again, let's go back to the dynamic reactor and see what we have right here. Alrighty, so we can see clearly downtrending, uptrending, and then there's the third zone, which I call weaving. So weaving is basically when we see the dynamic reactor being pierced over and over, right, for the price action. That doesn't mean that the dynamic reactor is not useful. Of course it's useful. Let me actually zoom in so you can see that example. So remember, as always, it is not about the breakout, it is about the retest, right? So doesn't always happen that retest, but it just happens so often that it's worth giving it a look. So once again, breaking through, retest, and off we go. But we did break through, right? Once again, right here, breaking. In this case, we did not have that pullback, but once again, breaking back below, right? In this case, we did have, again, the pullback, and off we go. So we could be making that that beautiful movement to the downside, right? Because we were breaking below it. So let's move on into the next zone, which is configuring or properly configuring the trend mode, right? So we already know that the dynamic reactor shows us uptrend, weaving, or sideways trading, right? Or sideways movement, and downtrend in here. So basically, if you already have kind of like a trend shifting tool, why not take advantage of it and use it to configure our trend mode, which is exactly what we're going to be doing, right? So double click on any of those flags. And by the way, if I unclick the abbreviated signals right here, you'll see the full name of those flags, right? You can see right here that it says strong downtrend, right? You can see right here that it says uptrend, right? You can see right here that it says, again, strong downtrend. So it doesn't say buy or sell. It is in fact showing you where the trend is happening and if it's strong or kind of like a normal trend that could be followed, right? So that's just a quick tip. If you see it compact, it's because you did click on the abbreviated signals. I like them to be compact. So once again, you can see right here that is SDT stands for strong downtrend, UT uptrend, right? SUT strong uptrend, and DT downtrend, right? So it's very simple, very intuitive. So just in case you are missing it, here it is. Now, since I want a manual configuration in here, I need to disable my trend optimization. Remember, I already have it on Optimize Everything, which is my first advice. Take a look at Optimize Everything before anything else. At this point, we already have gone through it, and we know we might be able to do it better. Remember, there are no specific settings. There are only your specific settings, and that's what we want to find, because everybody else might be seeing a different thing from what you're looking at, right? And we want to make this tool to work with what you're looking at, right? To make things easier for you, not to change the way you trade in order to box you in something that might not be working for you. That's why we don't share specific configurations. We do give you kind of like a guidance on where to start if you're kind of like looking for scalping, if you're looking for swing trading, or if you're looking for intraday. So a couple of those stuff. Nevertheless, we always advise finding the larger trend that you're looking for, right? Because remember, trend mode is not a buy or sell indicator. It lets you find a trend. So if you're trying to scalp maybe the 5 minutes, then knowing where the trend is will actually let you scalp more shorts in your downtrend or scalp more longs in your uptrend, right? So try not to force it by using low sensitivities or low agilities unless you know what you're doing and you know the risk that it implies using low sensitivities. Alrighty, so with that disclaimer apart, let's go back into the charts and take a look at what we have in here. Alright, so at this point, I'm going to be using trend mode as we mentioned and disabling. This is very, very important. Why is this very important? This is very important because once I disable this, whatever I have on trend sensitivity and trend agility will take effect, right? One more time, do not copy the settings. The settings are not optimized yet. We're going to go over them to optimize them so you understand how they work and you can change them yourself, right? So here's my first suggestion. If you don't know anything about trend sensitivity or trend agility, you can start by applying 60-60. Usually, it's a good starting point. Nevertheless, let's take a look at detail what they do and how to modify them properly, right? So, just for this example, I'm gonna set 30-10 right here, right? And one more time, remember, do not copy the settings because this is only for showing you purposes or for the class purposes. So we're going to be moving them all over the place, and at the end of the class, I'll guide you through how to set for short time frames, mid time frames, and large time frames. So do not hesitate on waiting on my call, right? So once again, let's get back into the charts, and let's do 30-10 just for now. So once I have 30-10 and I have it on disable, remember disable it before we have something in here. I'm going to be clicking OK right here, and we have something that's looking like this. Alrighty, so it's looking a little bit too messy, which if you zoom into this part of the chart, you might be looking, or it might be looking like, oh well, it's looking pretty nice. I mean, if I would ignore what OC is telling me, and I would have entered for a long in here, and then switching for a short in here, well, I would have made some money, right? Until you don't, because this implies interference. We're gonna take a look at what this is looking like. For example, if you take a look at the chart right here, this is a wave pattern. What do I call this a wave pattern? Remember your physics class when we talked about waves going through the air, or magnetism, or basically a wave. Just a wave pattern in which you can calculate the distance between peaks and the size of the wave, right? Basically modulation and amplitude, right? The basic structure of a wave pattern, right? But what happens when we have interference? Well, when we have interference, it means that we do not have a clean wave pattern. So let's take a look at this zone. And of course, we can identify it like a wave pattern. But you can see it's very peachy, very kind of like chaotic, not following the same nice distribution that we saw in here. That's why I call these zones interference. Something about interference pattern is that we usually identify price ranging, right? A quick tip for you guys, just let me get out of my way just to show you, is that if I go over my smart money concept, let me just clear up for you guys. So we'll take a look at this in the future, so don't worry. And only take a look at my predictive ranges at this point and click OK. Remember, I'm not changing anything in here. Just clicking OK and then turning it on. You can see that the predictive ranges and the support and resistance zones, right, which are support and resistance zones and predictive ranges, are catching very, very accurately this wave pattern or this interference zones or this sideways market. So what it means, it's basically that the market is neither going up or going down. Remember, a trend usually is a series of higher highs and higher lows for an uptrend, or lower highs, right, and lower lows for a downtrend. All right, so what happens when we're moving sideways? Well, we do not have a trend. Therefore, trend mode cannot detect a trend, and that's why we see interference not only in the pattern that we see in here, but also we have interference between these flags, right? So here's one tip of Market Oracle at this point is that now you can start taking a look at if you want to be having that interference on your chart, because the interference on your chart will give you with 70% accuracy that we will be into a ranging zone. So what is that important? Because if you're ranging and you can early identify tops and bottom of that range, it's basically having a cheat sheet. And who doesn't like a cheat sheet, right? I mean, you basically has guaranteed right here a tops, right, for shorts and bottoms for longs. And you could basically already be into a short when it breaks down. Remember, a price range, we don't know when it's going to be breaking down. We can start analyzing and predicting it with a spoiler, the dynamic reactor, but also with the oscillator. So now that we know how the interference actually could be beneficial, let's take a look at the opposite way and try to remove it, right? So now it's time to take a look at the proper settings on the Market Oracle and start configuring it. So for that, let's explain first what is right here the trend sensitivity. Trend sensitivity is basically measurement on how big of a trend we're looking for, right? At this point, we can see that we are a little bit strangled with the size of that trend, right? Basically, yes, this part is looking great, but this part it is not if you do not like the interference. And we're going to be trying to search for bigger trends. Remember, my first suggestion, and I stand with it, is that we want to be finding bigger trends. Remember, we want to be using our dynamic reactor to show us where are we having that downtrend, right? And then when are we breaking above? And then when we're breaking below, right? And again, when we are breaking above and when we're breaking below, right? So basically, I want to find this as a single trend, right? Or this as a single trend and this one as a single trend. So I basically want to find 3 different trends in here, or better yet, I could even try to find this whole trend as a downtrend, and then when we break above, changing trend, and then changing back trend, right? So you can see this gets much more profitable, right? Not because I'm buying and selling on the flags, no, because knowing that I'm in a downtrend, it gives me a much more series of opportunities to enter shorts or to take advantage of the pullbacks, right? And maybe, or better yet, surely getting out when we bounce in big resistance, right? Remember, what we talked about the dynamic reactor is that once we break below, every single pullback is good for a entry, right? So if you know you're downtrending and you're hitting the dynamic reactor, you have 2 options. You could either take 50% of your gains and then follow the trend if it breaks above, or as soon as you see it flipping back, you take your next 50%, therefore having a great trade right there, right? To the upside, and then the next one to the downside. So you know when you're downtrending that big support or big resistance might be critical for your position. So for that, let's try to jump into my first suggestion. Remember, guys, I tell you to start with 60-60, so let's do that. So let me change the trend sensitivity to 60. So basically, I went to find a 330 distance trend to a 60 distance trend, right? So let me change it back, and please take a look at this zone, right? So let's get back into 30, and we're going to have much more flags in here. And as we increase this number, we're going to be finding larger trends, right? I mean, at this point, this is looking good. Look at that. This itty-bitty interference, which, spoiler alert, interference, we will never be able to completely get rid of it. But we can reduce it, just like in this case. Look at this case right here. We can reduce it to actually not being a problem. And how is this not a problem? Well, let's take a look at right here that, remember, yes, I have an uptrend, but guess what? I'm still below the dynamic reactor, right? So I know I'm bearish until I break above the dynamic reactor. I retest and off we go. Remember, it is not about the breakout, it is about the retest, right? So that's a neat trick to actually be ruling out whatever is left out of the interference in our whole trend, right? So far looking good, but I think we can do better. In fact, I know we can do better. So let's jump into that. So let me double click again into this settings, and now let's put it back into 30 just so you can see what does trend agility is and how it affects the chart, right? So now let's take back a look at 3010, which is a low agility, low sensitivity. Let's give it 1 sec for it to load. Alrighty, and then let's focus into this zone and this zone, right? So let me actually move it here so we have a macro view of everything, right? So at this point, and we're gonna start in here. At this point, you can start seeing that as we spoke, that we're very close to the tops or to the bottoms. But remember, we are not at the top and we are not at the bottom. You can see we have a little latency in here, right? And this is because the trend mode, it is a reactive signal system. So just so you understand, on overall the chart prime series, we have two major groups of signals. We have predictive signals, which are trying to predict what's coming ahead, and we have reactive signals, which are proven signals based on reaction of something. In this case, trend mode is a reactive signal and is based on the reaction of the price action. So let's head back into the chart and take a look at that. Alrighty, so remember that because this is not a buy or sell indicator, a very small latency will no matter because we're looking for trends, right? And remember, in every single trend theory, we need to confirm the trend change, and that's why we need the price to move for us to confirm the trend change, and then we're going to have a flag. Once again, the market moved, and then we have a flag. The market moved, 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 and then we have a flag, right? So there is a little latency built into the indicator because that's the way a trend is calculated, and there is no way around it. And this is truth for both very small trends like this ones and huge and big trends like the one that we're trying to get, right? But you'll notice that that itty bitty part will basically be very meaningless once you know how to use trend mode. Alrighty, so for that, let's head back into the trend sensitivity and trend agility. So what is trend agility? Let's recap on the trend sensitivity. So the trend sensitivity is a measurement on how big of trends we're looking for, right? And then trend agility, it's a measurement on how much latency we're gonna be adding to this flag. So if I add latency, I'm gonna be fine-tuning it and moving it to my right, right? If I reduce the latency on this one, I could be fine-tuning it and moving it to my left, right? So basically, I can time how fast am I jumping in and out from the trades, and also adding latency or reducing latency of those flags to actually make a better trend finder, right? So at this point, you might be thinking to yourself, hey, OC, then I can start reducing the latency in this point, right here, and move it back so I can have a great entry to enter right down here and exit right at the top, and then just hit switch and do the same over and over, right? Well, spoiler alert, that is not possible, but let's just try it anyway, right? So let's have fun a little bit in here, and let's take a look at what's going on in this section. So
Let's go double clicking here and let's see what happens if I reduce trend agility. I don't know, guys. Let's just take a guess. Maybe half of that agility will be enough to pull that flag to my left. Maybe reducing that much of latency that I can have it at the top. Well, let's just try it. Let's do 5, right? Then click enter and let's just wait for this little I, right? This little I right here to stop. And what happens? Well, oh surprise, it's gone. We have a trend mode disappearing. Why is that? Because 5 is such a low number that at this point it can no longer calculate an accurate trend. So basically we don't have enough information to be able to calculate a trend. So what is the lowest number that I can place in there? Usually it's somewhere around 8. So if I dial 8, let's take a look at what's going on right here in the chart, right? And just wait for that little eye to stop moving, and let's mark those flags where they are with 8 sensitivity, 8 agility, and let's head back in here and let's dial back in what I was suggesting you guys to start with, not to copy, remember, to start with. So 10. So let's also wait for that little eye to move. And what happened? Did we have any change on the charts? Not that I can see. I bet neither can you. I mean, I assure you, somewhere in the chart, we have one of those flags moving 1 or 2 candles aside. But at this point, going from 8 to 10 is such a low distance or a low sensitivity change that is basically non-existent. So then, why am I suggesting you guys to start using 10 instead, or start calculating it 10 instead of 8? Well, because I would be also suggesting going into kind of like a 10 increments. So if we had 8 right there, then we would have to do, I don't know, 18, 28, or even worse, going from 8 to 16 to 24 to 32 to 40 to 48, so on and so forth, right? So for that matter, I just think 10 it's a good starting number. So we can do 10, 20, 30, 40, 50, etc., right? I mean, it's just way much easier right that way, right? So for that reason, I'm going to start by using 10. And now you can see that 10 is such a low number that we can not longer pull these flags to my left. I cannot reduce any more latency to it, right? So then, what the heck, OC, right? Why do I want to be adding more latency to an indicator that already carries on a latency? Well, the latency that you will be adding might not have the reaction that you might be expecting. Spoiler, will be better. So let's jump to the chart and see it. Alrighty, so here's where the fun starts, because we're going to be realizing how to fine tune it, right? So for that, let's do one exercise, and here we go. And let's modify the 10. We're gonna put something very dramatic like 70. But before we do that, let me mark 2 candles. Let me mark this one, let me mark this one, and let me do some scrubble like that, right? So I think that's good. Now, and everything will make sense in a second, right? And then let's just kind of like go crazy with the trend agility, right? Let's do something like 70 or something. So now that we have 70 here, let's wait for that little eye to stop moving, and voila. What do we have? Well, we have that this starting flag, which, by the way, me OC, I call this an anchor flag, right? Why is it an anchor flag? Because that's basically where the hard trend is calculated to begin with. And then we can see the middle flags or the end flag actually be able to move it to my right. Therefore, erasing every single flag that was in the way, right? Therefore, I have a much more profitable trend calculation. So what is this much more profitable, having this big trend? Because if I would have entered at the breakout of our resistance, being underneath the dynamic reactor, having a confirmation flag, right? going short in here. Alrighty, maybe I got out at this bounce, so calling my short in here. And then I see that I have those pullbacks. Alrighty, next short, right? Next short, next short, next short, and next short. So you had actually 1, 2, 3, 4, 5 more opportunities to short the market into a downtrend, right? Which is very useful, right? I mean, you have a little bit more opportunities to make a little bit more money right there. Alrighty. So that's why you get much more profits out of a big trend rather than having a ton of flags just making interference within them, right? But we can still do better. So let's follow my advice and start with 60-60 right here, right? Because that's the first thing that I told you guys, that if you have no idea on how to do a manual trend sensitivity, let's get started with 60-60. So let's do so. All right, let me click OK. And remember one more time that we're trying to pair. When we break below the dynamic reactor, we want to have that downtrend signal, right? When we break above the dynamic reactor, we want to have that uptrend signal. Once again, when we break below the dynamic reactor, we want to have that downtrend signal. And once again, when we break above the dynamic reactor, we want to have that uptrend signal. So far, it's basically over. I mean, this is pretty darn good, right? I mean, we only had one interference left, but we can actually work with it. Why? Remember I gave you the answer before, because we were underneath the dynamic reactor and we were maybe only waiting for the price to pierce through it, but instead of piercing it, we have that rejection, therefore confirming that we are still in a downtrend. Alrighty. Alrighty, so let's clear this up one more time and let's head over to our trend sensitivity and agility. At this point, I want to start moving my trend agility all the way to somewhere around 100, right? So once I start getting closer to 100 and I don't see big changes in the chart, then it means it's time for me to start moving my trend sensitivity. Remember, always, always, always start with your trend sensitivity and then fine tune it with your trend agility. Once your trend agility start getting close to 100, to the number 100, 100, it could be 90, 100, 110, 120, something around those zones, right? Then it's just a matter of dialing back down your agility and increasing your sensitivity. So let's do that exercise right now. So let me just move the chart in here so we can see a little bit more of that chart. Remember that since we're trying to find big trends, having a macro view on what's going on in the market, it's good. So I'm going to start rising this to 70. Remember, I'm going to be adding it by 10 increments. So let's wait for that little eye to move. Yeah, we reduced this interference a little bit. So maybe if I start doing something like 80, we might be able to get rid of it. So I already know it will not work. So let's jump right into the hundreds and then take a look at what's going on here. Alrighty, so let's wait for that little eye to finish. Alrighty, so I'm already very close to 100 or even in the 100, and I don't see any big changes on my chart. So I'm going to dial my trend agility back down to somewhere around 40 or 30 or 20, something that you feel comfortable starting with, right? If you have no idea, just start with 10 right there, right? So again, start with 10 agility. Remember, 10 is the lowest agility that you can add, and then start rising your agility in 10 increments. So, and then now that I have reset my trend agility, it's time for me to increase my sensitivity, because remember, I'm starting with my trend sensitivity and then fine-tuning my sensitivity with my agility. Once again, I'm going to be moving my trend sensitivity back up and then fine-tuning it with my agility. Alrighty, so let's increase it from 60 to 70 and start increasing my trend agility in 10 increments. So right out of the box, alright, we see a big change in here. So let's go over 20, then 30 and 40. So I already know that my OC right here, this guys, prefer trend sensitivity and agility. It is 70.40. So let's go ahead and punch that in, right? So let's see what's going on right here. And right out of the box, we can see that we have a great sensitivity. So remember, it is not for you to copy my sensitivity. Now that you understand what a trend sensitivity and trend agility does, do yours. If you have still no idea where to start with 60-60 and then increase your trend agility until the number 100. And then if nothing really happened that satisfies you, then dial it back to 10 and then start moving your trend sensitivity again in trend increments. All right, so let's head back into this zone and take a look at what we have in here. Alrighty, so I have an early call in here with my downtrend signal. Then I'm breaking through that dynamic reactor. And remember, it is not about the breakout. It's about what? The retest. You got it. Alrighty, so look at that. Breakout and retest. Beautiful retest. One more time. Alrighty, so we have the retest, and that was our first entry. Remember, the flag of downtrend, it is not your entry. Do not take those flags as entry, because there is going to be another quick tip that I'm going to give you ahead, which will increase the way you take those trades, or even better, just increase your profitability based on this tiny little trick that we'll show you. Alrighty, so remember, it's not getting into the flag. It is not about the breakout. It's about the retest, and off we go, right? Off we go. Alrighty, then we break above the dynamic reactor, and we have that beautiful uptrend. Again, we break below the dynamic reactor, and in this case, it was just a little bit late, but, and this is the trick. Remember, it's not about the breakout, it's about the retest. But in this case, we did not have a retest, but we have a pullback. And guess what? The pullback, look at that, it was almost at the beginning of that flag, right? That's why I was telling you, do not enter on those flags. Try to wait for that recuperation or pullback entry, right? Even if the trend was not successfully accomplished, your stop loss will be much lower. Let's take a look at this other example that we have right here. Let me zoom in so we can see it. All right, so this is the example I was telling you about. So if I would have entered on the flag, I would have entered right here and the candle close, right? And then going down, where at, look at that, right at where that flag was. So if I would have waited for a little bit for that pullback and enter it on the pullback, my stop loss, despite this was not a successful uptrend, like accomplishing a great winnings, I would have had a stop loss. Sorry, wrong one. Let's do a long position, right? And here, my stop loss will be somewhere below, the lower, and then aiming for the next high, right? So as you can see, I would have entered in here, waited for a little bit, going up, and then once I have one full flag moving my stop to entry, and then when it reverses back, look at that, or here, look at that. It took me out without losing a single penny or a single dollar, right? So another thing that you need to consider is that the higher the leverage, the more the fees. So moving your stop to entry might not be enough. That's why I advise you guys to stay away from leverage, or at least stay away from high leverage. Also, this is a great opportunity to remind you, this is not financial advice, right? This is only me, OC, explaining to you how I use the indicators. So let's get back into the charts and see what else we have. Alrighty, so with that little trick, remember waiting for that little pullback, and where's your kind of like a measurement right at where that candle happened, right? So you can see right here much more clear that we had it alrighty, very nicely. And when we don't have it, we usually have the pullback, the usual pullback, like the retest. So like, for example, going here, breakout, retest, right? And again, having a better stop loss, then breakout, retest, and this time off we go. Nice, right? Alrighty. So here we go with this one, and we can even do it a little bit better. Nevertheless, I like this configuration because it is giving me an early entry here, or an early, not entry, but indication of a downtrend. But let's configure it to something like, I don't know, 80-80. All right, so let's do 80-80 in here, and let's take a look at what's going on in the market. So with that 80-80, look at that. We actually got rid of this fake out, and we had just a late signal here, but we already know it's not about the breakout, it's about the retest, right? And if you miss that retest and then you were in for that downtrend, don't worry. Once again, we had that pullback right at the same or very close point where that flag was charted, right? So you can see it right here. Once again, very close where that flag was charted. Alrighty. So now we can have a better whole trend, right? So that's very important for us to know. So let me clear this up, and let's try to do the same thing with some lower time frames. So remember, 70-40, it's my own personal sensitivity and agility for 4 hours, right? But let's take a look at what was going on maybe on the 5 minutes and also daily, right? So you can see how usually once you configure your you properly configure your trend mode on your working time frame, which is the working time frame is the time frame in which you start looking for your opportunities to enter and exit, basically where you're trading opportunities, or basically where you spend the most time for trading or for looking for trades, right? So that's going to be your working time frame. So once you configure your trend mode on your working time frame, it will carry on through most of the time frames that you do. So for that, let's jump back into the charts in here. Let me head back into 4 and then double click and do my preferred configuration. That for me, it's 70-40 right here. Clicking OK, and let's see, let's just wait for it to load. Alrighty, so remember, I have configured on my base time frame or my working time frame. If I move up to basically daily, which is the time frame that where I take my macro information, then let's just give it 1 sec for it to load. You see that the trend mode carry on very nicely. Look at that. Downtrending, right? It's not about the breakout, it's about the retest very nicely. And look at what we have in here, right? We just printed this flag a couple days ago, 2 weeks. In fact, if you were looking into the trade setups, I gave you my entry right when this flag appeared because I have a long term strategy. So if you don't want to miss on that long-term strategy, take a look at the trade setups when I post some things in there, and also I'll be posting my main movements in there when I do when I do enter hardly into the market. And yeah, so let's take a look at how it has performed previously, right? So you can see with my own preferred not strategy but sensitivity right here, it has performed very nicely, right? Once again in here, very nicely. Remember, I'm not trying to catch the tops with this tool, I'm trying to catch the trend, right? So far, I mean, this one was, I mean, almost precisely at the bottom. I don't know if we're going to have the same pullback, which remember, this could give us the next entry opportunity, right? So we're going to be very, very cautious on the next Bitcoin pullback because we might be having that pullback, remember, rather at the dynamic reactor, right? Or at the same zone that we had it previously. This will depend on the micro market. So yeah, and also remember that daily is huge movements. Nevertheless, there you go, very precise, very accurate. Alrighty, so let's move into, I don't know, the 5 minutes. So going from the 4 hours to the 5 minutes, that is a big jump, right? I mean, 4 hours to 5 minutes, that's insanely a big jump. Nevertheless, we can take a look at what's going on right here, and it is not that bad. I mean, look at that. It is working very nicely when we broke above the dynamic reactor. Look at that. Retest, and off we go, right? Retest, and off we go. Retest, oh no, breaking through, pullback, and off we go, right? You see how accurate it's been. I mean, we still had that interference. Remember that ruling completely out interference, it is not possible. But we can work around it, right? Or even yet, we can even try to improve our trend agility and sensitivity. So let's try to do that right here. Alrighty, so we already know right here that we can start manipulating our trend agility and sensitivity. So let's try to do that. Alrighty, so I don't know, let me search for a bigger portion. Yeah, something like this will work, right? And let's start increasing my trend or my trend agility to improve or get rid of this thing. So right out of the box, let's go over, I don't know, 80 or even 90 or 100. Let's just try to look for those big agilities. And as we can see, basically nothing happened. So I make a huge jump going from 40 to 80 and nothing dramatic happened. Let's go back to 40 just so we can see what the change was. I mean, yes, I cut out through this interference, which, I mean, if I look back to it, it is an important change, right? But not the one that I was expecting. All right, so let's get back into 80 and see what we have. Much cleaner trends, right? So now, since I'm getting very close to the hundreds, let's dial this button back to 40 and then increase my trend sensitivity to 80. And I already know what configuration I like, but this is a process that you need to follow. So at this point, I'm going to start rising my trend agility. I already know that for me, OC 80-80 on the 5 minutes works amazing. So remember, I'm not trying. Did I punch it? Yes. All right. Remember, I'm not trying to get a buy or sell indicator. I'm trying at this point to have a trend finder, right? So let's wait for that to load. And see 80-80. Alrighty, let's make sure that this is disabled, and it's looking very nicely. Again, yes, on the sideways market, on the interference zones, we are having exactly that interference, but remember what we talked about, the dynamic reactor. So whenever we broke above, we are bullish, and every single retest is good for repositioning yourself. At this point, yes, it would have maybe take you out, but then breaking back up would have told you something, right? And if not, if you were also late to this, don't worry, you had your next pullback, right? And then you could have taken the ride, all this right up here. Look at that, very nicely. So with this trend mode and this strategy that I just showed you, remember, which is the trend mode with the dynamic reactor strategy, we already have seen it. So it will give you a great entry and exit. So something to note on this strategy, it is not meant to be used as your day-on-day strategy. This is so simple that it's meant to be used when everything is going wrong, when maybe you have a losing position, when maybe you are under stress, when maybe you're just coming not in the mood and you cannot maybe read correctly the market. So when everything is going wrong, you just go back to basics, and this is basics, right? So let's do a quick recap on this strategy to set up the basis for trading with the indicators. Alrighty. So at this point, let me clear this up and do the basic scenario. So let's go over the end of it and perform a basic analysis. So the first thing I want to know is if I'm bullish or bearish in this time frame. So the first thing is going, maybe take a look at the higher time frames, but seeing where am I at corresponding to the dynamic reactor. Am I above? Yes, I'm bullish, right? Am I below? Yes, then I will be bearish, right? Then what kind of flag do I have? Well, I have a bullish flag. So what does that mean? Well, that I might be encountering a bullish movement. Nevertheless, if I scroll like backwards a little bit, I can see that I'm weaving, right? You can see that I'm weaving in this zone. So what do I do when I'm weaving? I can start using my smart money concepts, or I can start using some other tool, like for example this regression tool, right? So this regression tool basically give me the hints where to enter for shorts, where to enter for longs, and at this point that you need to be a little bit careful because we're very close to the top, right? Very close to the top, being above the dynamic reactor and having an uptrend, right? So if we have enough momentum, we might be breaking through. And how do I read momentum? Well, Glad you asked, because now it's the time to take a look at the oscillator. So the oscillator will show you momentum. So right here we can see we start building up that momentum right here, and at this point we're having a rejection. But what happened with that rejection? We're flipping back up, which means we might be going for a cluster. So let's take a look at a cluster in this zone. At this point, look at this. This is a cluster. This is an oscillator double top cluster, right? And guess what happened? Look at that dramatic pullback. So far, either we wait for the breakout and retest and off we go, right? Or wait for that double top rejection and off we go. So the key at this point when we are in a danger zone will be the oscillator. Alrighty, so let's wrap it up and make a quick recap on this strategy. So for this strategy, we'll be taking a look at first configuring the market oracle based on the dynamic reactor, right? Remember, always start with your trend sensitivity and then add up your trend agility. Then, as number two, we're gonna be taking a look at whether if I have a bullish or bearish signal. So, am I underneath of the dynamic reactor, or am I above the dynamic reactor, or am I weaving on the dynamic reactor? Step one. Step two, do I have a bullish or a bearish signal? Do I have a bullish or a bearish signal? How does that compare to my dynamic reactor? And finally, taking a look at your oscillator. Do I have a divergence? Do I have the momentum going up? Do I have a flip of the ribbon? Don't worry, we're going to be also taking a look at the oscillator. So let's jump back right now into a much more advanced tool, which is a very practical, and I love it. So let me double click in here and also hover over the market oracle, click the gear icon, and finally change the signal mode to reversal mode, right? Something to note about the reversal mode, it is that reversal mode is a predictive signal. Remember that trend mode was a reactive signal. So a reactive signal reacts to the market or to the volume or to whatever it's designed to be reacting, right? So a predictive signal is trying to predict the market. So how does that work? Alrighty, so just so you know, reversal mode, it is not configurable. So let me repeat that. Reversal mode, it is not configurable. So you will not be able to change those flags. So blue flags are equal to reversal mode, and reversal mode, it is not configurable. Remember, down here, take a look at it right here, right here. Here we go. Right here, we have trend sensitivity. Remember, it's for trend mode, right? Not for reversal mode. Then again, trend agility is for trend mode, not for reversal mode. So it doesn't matter what you change in here, it will have no effect on your reversal. So let me just dial down here 7040 because that is my trend mode preferred settings. Remember, at this point we're looking at reversal, the trend mode. Nevertheless, I like to keep the things that I use in a certain order. That's why I'm going to, just as a personal preference, I'm going to dial back down into my personal settings, right? So now let's explain a little bit on that reversal mode, right? So reversal mode is a predictive signal. Remember, it's trying to predict the signal. So it's basically already has a certain checklist which is constantly looking in the market for that checklist, right? Once all of those parameters are met, we're going to have an early call most of the cases that will tell you, hey buddy, look at this. We have all of the parameters checked and all of the conditions are given for a localized change of direction. This is important. Remember, we have trend mode to find trends. And in this case, we have reversal mode to find localized change of direction. Remember, trend mode is for trends and reversal mode is for lower or shorter or more instantaneous movements, right? So a reversal might not be talking about, or specifically will not be talking about, a change of trend if you're not maybe on daily or weekly or some higher time frames. In this case, 4 hour will not be talking about a trend shifting in the micro markets, right? Could be a trend shifting in the 4 hours time frame, but not in the micro markets. Nevertheless, that's why we have trend mode to find trends. Now we're trying to localize more like pinpoint change of direction, reversals, to try to take advantage of much more trades that will give you that hint to enter or exit, right? So let's head back into the charts and remember that this is not a buy or sell indicator. This is not telling you, hey, enter for a short. This is not telling you that. This is telling you, hey, buddy, take a look at your charts right here. Take a look at your charts because something important it's about to happen. Why? Because the possibilities are given for a reversal or a localized change of direction, right? So I want you guys to draw this with me. Please take out your notebooks or at least pause the video, go get a piece of paper and bring back a pen with you also, because we're gonna be doing some different drawings in here, and I will really love for you guys to have it on hand. Also, you have it on the smart book, so if you don't feel like writing it down, well, you won't be missing out, but you also have it on your smart book. So let's explain a little bit on this flex. So far, this flex, look at that, right at the bottom and right at the top, right? Right at the bottom and right at the top. So what the hell, OC? You told me that I will never have those flags at the tops and bottoms, right? Well, remember that was for for trend mode, which is a reactive signal. And in this case, we're talking about predictive mode. Well, I mean, reversal mode, which is a reactive. A predictive signal, right? So it's trying to predict. It's giving you the heads up before something happens. Alrighty. That's why we can see it in most of the cases at the top and bottom. But let's dive right in and also take a look at this specific flag. So we also take a look at every single condition and every single possibility in the rounds of the blue flags, right? Which is reversal mode. So let me clear this up and then start drawing. So first things first, option number one or possibility number one. So possibility number one is that the price keeps going up, right? Then we have a blue flag in here and we have a sharp change of direction. Same thing could be happening the other way around, right? Going down, then having a little flag down here, right? A blue flag down there, and then having a sharp change of direction. Just like it happened here, right? Just like it happened here. Sharp change of direction, right? So, alrighty. Then option number two, this is very important. So the next one is very similar, but in this case we're going up. Then we're gonna find ourselves with a blue flag, and then it just happens to reverse, but not all the way, to the next support or resistance, depending what you're looking for, or what you're looking for. Basically, if it's up there, it will be bouncing from the next or the immediate support, therefore launching the price even higher, right? The other way around also works, that we're going down. We have that blue flag down here, and then we see a change of direction, and we found the next resistance, and it just so happened that that resistance is strong enough that launches the price farther down, right? So my first suggestion is, remember, take a look at where your support and resistance are, and this falls very in line, which the mantra that I always tell you, it's not about the breakout. Look at this. It's not about the breakout. It's about the what? The retest. You got it. Alrighty. So let's take a look at number three right here. Number three. And it's very similar to the section. So in this case, we're going up. We're having that blue flag up here. And then we're going to be seeing the price ranges, right? So when we see the price ranging, we can expect for the possibilities to be giving for us to follow previous movement. In this case, if we were moving up, we might be keep moving up. So the possibilities are given for us to follow previous movement in this case. The same thing happens the other way around. going down, having that blue flag at the bottom, and then we see the price ranging, right? So the possibilities are given for the price keep falling down. We can see this right here. Look at this. Going down, right? Having a blue flag. So going down, having that blue flag. Ranging, right? Ranging. And then seeing that movement to the downside. So continuation of previous trend, right? Same thing repeats itself here. Going down, blue flag, ranging, keep going down. In fact, we saw the exact same thing happening here. Let me zoom in so we can see it much clearer in here. Alrighty. So remember this is the 4 hour, but if you dial down to the 1 hour, you'll see the same thing. Alright, going up, having blue flag, ranging, guess what? Going up, right? Going up, blue flag, ranging, guess what? Going up. Going up, blue flag, pretty ugly range, but nevertheless a range, and going up. Alrighty. So this doesn't mean that every single time it'll do the same thing. It's telling you that the possibilities are given for a continuation on the trend, or at least on the third option. But at this point, I know we're missing one more option, and that's exactly where this little flag comes into place, right? So the only one that we're missing is this one, the number 2, the example of number 2, right? Going up, flag, finding support, and off we go, right? So going up, having that flag, finding support, right? And going up. But you might be thinking, hey OC, you know what? You're missing something there. You said finding support, but where's the support? The only thing I see there is a dynamic reactor, which you said is not support, nevertheless could be acting like one, but I don't see it bouncing off the dynamic reactor. Well, you'll be completely correct, right? So remember, once again, you already know this, but once again, dynamic reactor is not a support resistance, and it is a high volume zone, which could be used as a support resistance. But we have our smart money concepts that give us the support and resistance that we need. So for that, I'm going to be enabling my support and resistance, and then the only single thing that I'll be changing, right, is going to be this max allowed breakout from 3 to 5, right? Why? Because 3 is basically the minimum, and 5 is just a little bit above the minimum, right? So it's just my preferred configuration right there. Feel free to copy it if you want to, but also, and much more importantly, find your own, experiment a little bit on maximum breakout points, and basically, see what works for you. In this case, if you increase your maximum allowed breakout points, you're going to have stronger, more long-lasting support and resistance zones. If you reduce the amount of allowed breakouts, you're going to have easier to break support and resistance zones. So I want something within the middle, nothing too strong that never goes away because that's going to clutter my view, and nothing too weak that with every single touch it's going to just get rid of it, right? So another thing that I'm going to be doing, it's just moving this color, just dialing down to the letter Y. It is a personal preference. I just like to see my things a little bit more transparent. For me, give me a personal feeling or cleanness, or like having it much more organized, right? But that's me. Feel free to adjust the colors as you wish, since this is purely aesthetics. It has nothing to do with configuration. Again, predictive ranges, I'm going to leave them like that. And I'm going to be using a combination of reactive signals, which are support and resistance zones because they react, right? And predictive signals, which are my predictive ranges. Remember, I'm using the best of both worlds, both predictive and reactive, to give me a much more strong confluence point. Remember, that's key, confluence, right? Not a single indicator. Not because you see one resistance, it means it will definitely bounce from that zone. You need to see where the resistance converge, or where you have multiple points of resistance, or maybe you have a flip of the ribbon with a resistance, which is a very nice cluster, and then you see the price bouncing from that resistance. That will give you a high confluence zone, therefore being able to join which much more confident, right? So enough blah blah blah, and let's take a look at the charts, right? So once again, please copy this. If you have not yet copied it, please do so. Pause the video right here right now and go get copied. So let me remove all of the drawings and take a better look at this flag, right? Remember, we are analyzing the going up, having a blue flag, going down where to the next support, and then breaking above. Remember, this falls in line with, it is not about the breakout, it's about the what? Exactly, you got it, the retest, right? It's not about the breakout, it's about the retest. Alrighty, so once again, let me remove this and turn on right now my support and resistance zones right here, and try to make it a little zoom right there. Alrighty, so right out of the box, what do I see right there? Alrighty, where did I bounce from? Support, right? It's not about the breakout, it's about the what? The retest, right? There you go. That's the support line that you were looking for. So that's very important. So when you have one of those blue flags, you want to see where is the next or previous support and resistance, and if it has not prolonged too much, that it could be acting like it is not about the breakout but the retest, then you will need to be taking an eye to that support or resistance, depending what are you trying to do. If you're trying to short the market, make sure you're not running into support. And if you're trying to long the market, make sure you're not running into resistance, right? Alrighty, so that concludes the blue flags. So let's jump into the oscillator one more time and then wrap it up with one of our strategies, a much more advanced strategy. Alright, so for that, let me kind of like get rid on quotations with this indicator. So let me just move them up, maybe turn off my smart money concepts, and then double clicking here to reveal my oscillator, right? So my oscillator, it's a great indicator. Basically, it's giving you another set of eyes, another pair of eyes. So it will greatly improve the way you trade and also give you the heads up when you need them. So it's a great backup fighter for your war zone. So let's jump into a base configuration. Remember, this is going to be my own base configuration, and spoiler alert, I will not be touching any settings. Basically, it will be only aesthetics. So bear with me and pause it as you wish. So let's take a look at that. All right. So I'm gonna be double clicking on any part of that, of any part of those flags or signals, right? That will bring me to the settings. And because usually normal divergences are much more dramatic, or have a much more dramatic impact on the price action, that's why I rather trade on those instead of the hidden divergences. So for me, I'm gonna be turning off my hidden divergences. That's, again, that is a personal matter. That's a personal preference. If you like hidden divergences, be my guest. Please turn them on. Not because I tell you to, just get rid of them, right? Remember, this is about you. It is not about me, right? So let's get back into the settings. So I will be, for me, taking out the hidden divergences, and then make sure that my multi-divergent color, it's whatever I like. I'm gonna leave it just like this, and then turning on my multiple divergence color. So for that, let me bring your eyes to this divergence right here. All right, so if I change from disable to triple, whatever triple divergence and up will be marked in blue, right? So triple divergence, quadruple divergence, quintuple divergence, and up, they all will be marked in blue, right? If I rather have only quadruple divergence and up, then I'll choose quadruple divergence. Nevertheless, I like it on triple. That's the way I like it, right? Another thing that I'm going to be changing in the aesthetics is the zero line that is located right here. This little dotted line, very shy dotted line here. And I'm also going to be adding an extra two lines. So those lines are personal lines. They are not automatic. Basically, you decide where to place them. It's kind of like offset from the overbought zones and oversold zones. It's a threshold that you will decide where to put. So for that, I'm going to double click in here and then make sure my enable bullish control line, which is my threshold bullish control line, you see it appear down here, line, and then enable bearish control line, it will appear up here. Here we go. And then based on the volatility of the asset, like for example right here, it's very precise, showing me when low volatility of the asset actually reverses, right, without having to go into the red zone, right, and also having a reversal. So this is the point that I was telling you. Confluence, 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 right? So take a look at this part. Blue flag, right? Possible reversal, right? It's telling you, hey buddy, take a look at the chart because something it's about to happen, something important. All the stars are aligning here, and we have a very high possibility for a localized change of direction, right? Then you go back and take a look at your oscillator, right? And what do you see on your oscillator? You also see a early reversal, right? And the flip of the ribbon. So something important to note is that the flip of the ribbon, it is not an indicator. It's a state of an indicator. If I tell you the rope, it's like a knot on a rope, it's not that the rope has changed or has quit being a rope. No, it's just that the rope change of shape. We just have a knot on it, right? The same thing happens with the flip of the ribbon. So the ribbon is flipping, right? It's changing direction, it's flipping. That's what we meant, or that's what we mean when we talked about the flip of the ribbon. Alrighty. So now that we know what we intended when we're talking about the flip of the ribbon, that's going to be here happening. Look at that flip of the ribbon, right? Right at my bearish control line, this dotted line, right? And guess what? Move to the downside. Therefore, because I was bullish, because I'm above the dynamic reactor, right? I'm taking advantage of that retracement till where? Till my dynamic reactor. See how I'm already adding the previous strategy, right? So where to my big support, next big support or resistance in this case would be dynamic reactor, which is a high volume zone. Alrighty, so let's take a look at what else on the oscillator. So I'm gonna go ahead and go over style up here and then scroll back down until I see the zero line. I want the zero line to have a full opacity. I also want to make it thicker, and I want it to be a straight line. So my attention is being drawn to the zero line, right? Then my bullish control line, just because it's bullish, I'm gonna put it on green, turn up the opacity and leave it like it is. And then bearish, again red, turning up the opacity and leave it like it is. So far I already have finished with my own personal configuration. Remember, I have not changed any settings so far. I'm using default settings, only aesthetic look, right? So right here, let's see what we have. So at this point, we can identify different points of parts of the oscillator. We can see this red zone and this green zone, which acts like a RSI. So when the middle ribbon goes and hits that zone, the first thing that we're going to be seeing is that we're going to be making a golden box. If I zoom out or zoom in a little bit, you'll see that what in the beginning looked like a rectangle is actually a series of boxes. So that box is telling you, well, the oscillator ribbon, it's in the round, right, or the round of overboughtness. So it is overbought, right? And then when we have the flip of the ribbon and we have a lower value, or we're getting out of that zone, we're going to have a OB text, which means overbought, which means we were definitely overbought. Why is telling you that we were definitely overbought? Because just like an RSI, we could continue getting overbought over and over and over in the same movement, But the important part is knowing when we are pivoting out of the overboughtness, to say it somehow. The early call for that is the flip of the ribbon. The confirmation from the flip of the ribbon is the OB text, right? Right when we have a lesser value from the overboughtness or a lesser value from oversoldness. Here we go. When we are coming out of this zone, this range that we have in here. So the same thing goes for the red, which is overbought, and the green, which is oversold, right? Then we can note that we have this triangle. Let me search for another one. So let me see. Oh, here we go. There's another one. Here's another red triangle, right? And another green triangle and another green triangle, right? Those triangles are possible reversals. But what do we call these ones? Well, reversal mode, but PRU means possible reversal up. And how do we call the green ones? We call them also possible reversal up. So what's the difference? Well, basically, is the same tool, but with a different data set. Basically, we both are trying to localize short-term or localize change of direction in the price, but looking at different data sets. So basically, based on different part of the markets or different flanks, we're going to try to deduct a localized change of direction, right? So they are very nice, but if I had to choose between a blue flag or a triangle, I will always prefer the blue flag. So it's higher on my own ranking, right? So let's take a look at then the divergences. So what is a divergence? So a divergence usually happens when we see the volume, or in this case momentum, going down, and I'm talking about the flips, right, or the heels, right, going down, and then we see the price going up. So basically the price is diverging from the volume or from the momentum, right? If we have higher volume, if we see money going in big quantities into an asset, we can predict that the asset will go higher, right? If we see volume leaving the asset, we can predict a movement to the downside, right? But what happens when we see volume going down and price keeps climbing? Well, we can start making a divergence. Usually a divergence is an unequilibrium or a lack of equilibrium in the markets, and sooner or later we're going to have that rejection or that going back to find liquidity to compensate that lack of equilibrium. As you can see, we had two divergences, right? And at the end of that that second divergence, we had that move where to the dynamic reactor. So the same thing happens for bullish divergences. Once we have a bullish divergence, we might be seeing the price reversing up, right? So divergences, I usually advise you guys to take a look at divergences on daily and 4 hours. So usually daily and 4 hours are very, very powerful indicators. As you go down in time frames, the divergences might not be as powerful as in higher time frames. Nevertheless, that doesn't mean that you should be ignoring them. Always take them into consideration. So also when we have a continuation from a divergence, so this is the same divergence, but instead of unifying two highs or two lows, is unifying four. So that's why we call this a quadruple divergence. If we see the same divergence going from 2 to 3 peaks, that's what we call a triple divergence. All right. So now it's time to talk about clusters in this case. So we have a ton of clusters, but we have gathered the most usual ones. So take note of this, and based on this list, I'm going to arrange them based on what I consider them to be the less important to the most important cluster. Nevertheless, if they are in this list, it means they all are outstanding from the rest of clusters. So the lower cluster is usually a offset cluster. What is an offset cluster? It's the gathering, right, of a reversal, a oversold golden box, and an OS text, right? So they need to be in the same zone, very close together. The closer they are together, the better, like in this case, right? But they don't need to be one on top of each other. So that's why we call them offset clusters. So offset, 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 so on and so forth, right? Then the next cluster, it's a line cluster. Like for example, in this case, we see the triangle being aligned or in one of those golden boxes and the OB text. So they are pretty much aligned. That's why we call them aligned clusters, right? And as you can see, very nice reaction. So remember, this is 4 hours. This is something like this. So yeah, since I have it like smooshed, it might be seeing a little bit or a very tiny movement. Nevertheless, I remind you guys that this is a 4 hour and we're looking to around 30% moves right here, or 10% moves, depending on the move. It's just an estimate. So now we have the next cluster, which is the perfect cluster. It's an aligned cluster with a previous divergence, right? The divergence position is very, very important. This is not a perfect cluster because the divergence comes afterwards, right? Not before, like in this case. So this is not a perfect cluster. This is a perfect cluster. This is a perfect cluster because the divergence comes first and then the aligned clusters come next, right? Alrighty. Then we have the double top cluster, and finally the blue cluster. It's a blue flag, right, with a previous divergence. Again, the divergence position is key. Needs to be first the divergence and then the blue flag. Alrighty. So those are basically the clusters that we have. So now it's time to jump into what I call the 3-layer strategy. Let's do revision number 1, and then next class we're going to take a look at revision number 2. So if you don't want to lose or miss on that revision, please stay tuned and tune up for the Monday class. Alrighty. So a 3-layer strategy consists in at least 3 layers. Remember, 3-layer strategies is at least 3 layers, right? Alright. So for that, I mean that if you find yourself using more or identifying another tool that you want to add to it, please do so. It is important that you have, remember, at least, at minimum of 3 layers. If you have 4 or 5 layers, it is way better. Nevertheless, do not add that many indicators that clutter your ability to see the price action and do and perform a quality analysis. Remember, the simplest, the better, but try to find that equilibrium between the minimum information that you need, right, and the simplest that you can get your chart. All right. So right here, the 3-layer strategy, I'm going to be dividing between 1, 2, and 3 layers. These layers correspond each one to a different indicator, which I'll be grading. So my layer number 1 and layer number 2 are going to be my heavy lifters. So that means I need to very carefully choose which layers I'm going to be using, because once I get those 2, I will only be waiting for a single blow of the wind to take that trade. So layer number 1, I want something to be very reliable, something that I know exactly how it behaves, right? In this case, I know my blue flags had a very high accuracy pointage. And not only that, I already know what are the variants between having those blue flags and what could happen when I have one of those flags, right? So for that, I'm going to be using my blue flag as my layer number 1, right? So layer number 1, its only purpose will be calling my attention to the chart, right? Not because the purpose is calling my attention to the chart means that they're worthless. The other way around. They're so important that I usually want them to be my alarm settings. So basically my layer 1 could be my base alarm setting for me to go check out the charts, right? So layer 1, blue flag, check. Now I want my layer 2. What's going to be my layer 2? My layer 2, it's going to be that layer that confirms or denies my layer 2. For that, I would like a tool that has a multiple flank view, right? So basically, might be looking a different way or a different part of the market that will complement my layer 1. In this case, I'm going to be using my oscillator. Why is that? Because my oscillator, it's a bundle indicator which gives me a ton of information. It gives me momentum. It gives me divergences. It gives me squeeze momentum. It gives me overbought, oversold, reversal, peak seeker, zero line. I mean, it's just insanely how much information I can get out of my oscillator. So for that matter, my oscillator, it's going to be confirming or denying my my layer 1, which are my blue flags. In this case, because my layer 2, it's one of my heavy lifters, I want to find very strong confluence in my oscillator to be my final deduction for my layer 2. All right, so that is very, very simple. I know it's a lot of like complicated words, but don't worry, it's very, very simple. So let's take a look at when I had that layer 1. So let's get back into that layer 1. When did that happen? The layer 1 happened right here. But let me clear this up so we can see it much clearer. Here we go. It happened right here. And the flags happens at the candle close. So basically at the same moment that the candle closed and the other candle opened, that's where we're going to be having that flag. So we're going to be having this flag at the candle close. So basically it will look like it's having a delay when it is not. But just for that purpose, I'm going to put it on the next candle just to make sure that we account for that feeling of kind of like, latency. But remember, we plotted and the candle close. Alrighty. So what then? Do I have something on my layer 2? Well, I have a aligned cluster. But wait, I do have a double top cluster, don't I? But wait, I have a perfect cluster with this aligned cluster and previous divergence, right? Or previous divergence right here. Alrighty. So not only that, if I have a divergence in here and I have a blue flag, that means I have the most reliable cluster. So basically I have a ton of confluence down here pointing at a reversal. And then I have my reversal flag, right? Of course. So layer 1 checked. Layer 2 checked. So this was a no-brainer. Look at that. Where to? Until I see a reversal, or when I see my oscillator going down into the oversoldness, or when I see another divergence, basically when I start seeing weakness in the market. So where did I have that divergence? Right there. So where did I have my reversal? Right here. So this would have been my taking profit zone. So somewhere around here, either here or here, right? So very neat, very nice. Alrighty. So we were talking about a 3-layer strategy, remember? So we were missing one. That third layer, it's going to be my triggering layer. So what is my triggering layer? It's basically the last layer that will tell me either if I should or not be taking that trade, or exactly where should I be taking that trade. So for that, I'm going to be using my Smart Money Concepts bundle and using my support and resistance boxes and also my my predictive ranges. Remember the video you just watched, the multi-time frame graded support and resistance. If you have not watched it yet, you are missing because this class needs it to be watched before. So head back and click the link below, right? And go watch that video. So what is that important? Because right here, remember, we're talking about support and resistance. And what better and more powerful support and resistance indicator than the multi-time frame graded support and resistance, the one that we have on the previous video, right? So if you configure that one in here, this is going to blow up. I mean, it's going to be insanely amazing. Nevertheless, let's just keep it simple, and because you already have taken a look at those, let's just take a look at these other indicators. Alrighty, so I'm going to be using my triggering as my support resistances and my predictive ranges. So what is triggering? If I'm looking to short the market, I want my triggering to be at the top, right? At the top. At the top. Not at the middle or at the bottom. Not at the middle of the bottom, because that indicates that I already have broken. And remember, it's not about the breakout. It's about the retest, and off we go. That's why I want to reject from it, right? I want to reject from it, not to break it and found support, because if I'm trying to short the market, I don't want it to be support. I want it to be resistance, right? Alrighty. So now you know what is not triggering and what it is triggering, right? What is triggering, what is triggering, what is triggering. Alrighty. So let's take a look at what's going on right here. Let's zoom in and go candle by candle in this situation. Alrighty. So let's see. At this point, where is my entry? Here is my blue flag. Let's just move it one candle before, and then layer 1, check blue flag. Layer 2, check. Layer 3, right here, I'm touching layer 3, upmost layer 3, right? Or even here, doesn't matter, whichever you liked. I usually wait for it to happen up here. So if you missed it in here, and that's what I love the 4 hours, because it gives me a full 4-hour time frame to actually be over with whatever I was doing, and then perform a quality analysis, right? And then open up my position. So if I miss this entry, don't worry. I have the next candle also hitting that entry. So let's take a look at where did we enter. So short position right here. As you can see, it could not be better, right? And off we go. So where do I place my stop loss? My stop loss needs to be at the next support and resistance, which at this point it's in here, but this is insanely big. I mean, of course I'm not going to be using that. So for that, I'm going to be using the next point that I have on hand. In this case, it's going to be right here, the top of that, here we go, the top of that swing high, right? So top of that swing high, and I'm also going to be adding some wiggle room. So my wiggle room, every single time that you see me live trading, I'm going to do eyeball it. But in this case, I'm going to show you what's the science behind it. So I want to find volatility, right? So for that volatility, I'm going to start measuring the previous weeks. I want a average size week. I don't want it to be the smallest one. I don't want it to be the largest one. I want it to be like average size, like that one. Look at that. Oh, maybe it's a little bit big. I can reduce that one. Yeah, good one. Matching, almost there, matching. You see, it's an average size right here. And I'm going to add it at the top of my stop loss. That is going to be my accurate stop loss compensating for volatility. Alrighty, then what's going to be my taking profits? Well, as always, because we have broken through dynamic reactor, we're looking for a retest, right? So where is my next big support and resistance? At this point, it's going to be down here, right? And since it's down there, this is where I'm going to be taking some early profits. Remember, for me, I will always be bagging myself some early profits. Here, you decide if you want to be taking 100%, 90%, 50%, 20%, 30%. The important part here is that you do take some profits, because remember, that money, it's in the wild, and somebody else, if the market goes the other way around, will take it from you. So that money is not yours until you claim it. And that's what I'm going to be doing exactly right now. I'm going to be claiming that money for myself and bagging myself 50% of my profits, right? So I already have 50% of my profits, and I'm willing to trail all the way to the next. Look at that, where was my triggering in here? Beautiful triggering right there, right? To the next triggering zone. Alrighty. So, as you can see, we made a beautiful trade divided in two, taking full advantage of what we might be able to take. Alrighty. So for this class, guys, it's going to be basically it. I know it's a huge amount of information. Don't worry. If you have a couple of questions, please feel free to request them on the public chats, or better yet, take a look at the smart book. We have taken a insane amount of time, especially Army Piper and I will have been going through that book, and we have built it up for you guys to take a look at the revision. Army Piper has released the version 2 of that smart book, in which you will find not only this strategy, but many other descriptions that we had prepared for you. Another point is that you can also take a look at the second class on the class recording channel. It's a great point to just do another review, maybe explaining in a little bit different way in a live class, which will bring much more spice and questions. Like we're gonna have a Q&A on those recordings, and then also sign up on the event section for the next class. It's gonna be Monday. So Monday is gonna be the next class. We're gonna be going over on detail. We're gonna do live analysis. We're gonna see another settings. We're gonna be seeing the multi-time frame support and resistance settings, also a couple of other indicators, and also the second revision of this three-layer strategy. Also remember that Army Piper just released the Piper Sniper strategy, so do not miss on that one. It's a great scalping strategy. You can't miss that one. It's modified a little bit much more complex version of the three-layer strategy, because the three-layer strategy is the bare bones of a strong strategy. Then from here, it's like building up your foundation. With a strong foundation, you have the abilities to keep building up until you become the trader that you want to be. So guys, thank you very much for your time. I appreciate you guys. As always, nothing from this could be done without your support, without your time, without you guys believing in us. So thank you very much, and see you on the next class.